Hello, and thank you for joining. This is Michelle Savage with XBRL US, and you are here for our webinar, Working with SEC Data for Analysts. Our speaker today is Campbell Pride. Campbell's our president and CEO, and we're very excited to be talking to you about how the highly structured nature of XBRL formatted data can be broken down and built back up in a number of different ways. This is going to be the first in a series of webinars where we talk about how XBRL data can be processed. And we're going to be specifically speaking to a processing language that we have built that can be used with XBRL data to help accomplish a number of things. So as we go through the presentation today, if you have any kind of technical issues, please email us at support@xbrl.us. and we'll do our best to get you back online. And as we go through the presentation, if you have questions for Campbell, please feel free to click on the Q&A link that you'll see on your screen, and we'll take the questions as they come in. So I'm going to talk a little bit about what we're going to cover today. First, Campbell's going to talk about the scope and structure of the US GAAP taxonomy. He's then going to focus on how aggregators prepare data for use, because when company data comes in financial statements, companies have their own way of reporting things. They may use different labels, different headers. There's lots of elements in the US GAAP taxonomy that can be selected from. So there is some preparation that needs to go into that process before you can really confidently compare, one entity to another. And then we're going to talk about how the unique structure of XBRL can be used to create a custom normalization. So normalizing the data so that it can be presented in the way that you may want to see it, which could be different than the way someone else wants to see it. And then we'll briefly talk about XBRL data that is available worldwide. So with that, I'm going to turn it over to Campbell Pride.
Thank you, Michelle. So we're just going to start just on the US GAAP taxonomy. And what we're going to talk about today is really normalizing the data in the US GAAP taxonomy. And what that means is, and what predominantly we've seen people been looking for initially has been be able to see a normalized view of the income statement, the balance sheet, and sometimes the cash flow statement. So we'll kind of go through and cover that at a high level. There's a lot of detail here. We can't get obviously through all of that, how you do it in an hour, but we can kind of give you an idea of what the high level concepts are, and what needs to be done, and what we're doing to make that easier. So the financial statements of the US GAAP taxonomy are broken up, or the taxonomy is broken up into a section with statements, and this is typically the elements you'd see in the financial statements, the balance sheet, the cash flows, and the income statement. They also a disclosure section which covers pretty much all of the footnote types disclosures that you would see in a set of financial statements. And then there's a document section, and this is really information about the filing or the report itself. What period is the report for? What's the fiscal period focus? And then there's other information in there as well, which can be used by filers to designate operations in countries and that kind of thing. So when we've been doing normalization of this data, we've been using components from all of these, and there's a few things you need to be able to do. You need to be able to identify what information is in the financial statements, what information is in the disclosures, and what's in the documents. And the taxonomy is structured in a way so you kind of have a pretty good idea of that. Now, we use the US GAAP taxonomy, but in addition to the US GAAP taxonomy, companies will also file an extension. So an extension taxonomy is really where the company is basically reporting what's in their financial statements, what's in their disclosures. And those are a key part of doing any normalization. You need to understand where a company is putting elements so that you know what they mean and where you can put them if you're going to normalize them to your own structured framework. And we'll talk about what that means in a minute. So you go to the next slide, please, Michelle. So if we're looking at just the statement part of the US GAAP taxonomy, many of you are well aware of this. I know there's people on the call who probably are not, but you'll see there's a number of sections. that have the word statement in it. You can see all of these have the word, there's a number, then there's a statement. So this basically is supposed to mirror what are the things that you'd typically find in a statement, be it a classified statement, an unclassified statement for the balance sheet, what's in the income statement, and what's in the cash flows. The US GAAP taxonomy is structured very roughly along, has some categorizations which kind of try to group types of concepts depending on the general nature and operations of the business. So the first one there, the 10,4000, that's really classified. That's typically what you're going to see for like a commercial and industrial company. And then then you've got other ones as well. You can see, because there's differences, usually there's going to be unclassified for deposit-based operations like a bank or insurance or real estate. And they also have, what's in a real estate, classified and unclassified. So they have all these different groups there. And then the same for the income statement, and then the same for the statement of cash flows. So the majority of filings filed today with the Securities and Exchange Commission are commercial industrial companies, and that the statement, they follow a similar statement structure where they've got current assets and non-current assets, and liabilities, etc. What we've done for the data that we're normalizing, and we've just really focused on the commercial and industrial. That's because it just represents the majority of companies. So what we've found is that if you're going to normalize this data, you really need different normalization routines for each of these different types of industries. The algorithms we've developed to normalize, for example, for commercial industrial, you can't just run that through, use that on a bank or an insurance company or necessarily a real estate, a REIT. Sometimes you can, sometimes you can't. And the reason for that is a lot of the logic is based on when you're doing the normalization, you need to look for certain things in a filing and normalize based off that. So just so you know, if you want to do any normalization of this data, it's best to have separate processes to process data, to process commercial industrial type companies separate from insurance or banking type companies or REITs. Basically, and generally speaking, they really fit into the two different types of categories, the classified and the unclassified. That's predominantly for balance sheet. All right, so we can go to the next slide. So one of the key things to do when doing the normalization, and this is one of the issues that many people have complained about over the years, is that, oh, well, we get all this, we've got this US GAAP taxonomy and it tries to capture everything, but companies report in different ways, and sometimes they include some things, sometimes they don't include others, sometimes they move them around. Depreciation is included in SG&A, but in other companies it's not included in SG&A. How do I get these values? How do I make sense of it all? And one of the key aspects of that is to use the calculation relationships that are defined in both the US GAAP taxonomy and that are defined in the company's filings. So just so everyone's aware, when a company does a filing with the SEC, they need to include a calculation relationship which defines what are the components of the elements that they're reporting. Now, these can differ from what is reported in the US GAAP taxonomy, but generally they should be consistent. However, in many cases, the US GAAP taxonomy includes subtotals, but in a company's filing, they're not going to include those same subtotals. So one of the things that needs to be done is when you're analyzing this data is you need to understand what is the calculation, how are they calculating items. So for example, what are they including in current assets? What are they including in non-current assets? What's there, what isn't there, what subtotals they have. And the way to determine that is by looking at the calculation trees that a company has defined in their filing. So that's the first thing that's critical to understand. If you try and take this data, if you just try and say, take this element that they've reported and map it to another element that you've created, let's say you have a customized set of tags that you want to get data for, that may not actually be the best way to do it, because what can happen in many cases is they may not, they may be in their company's filing, they may be, for example, including if you think you're getting SG&A, getting depreciation, your SG&A may be short the depreciation, for example. So it's just to reiterate, this is imperative that you understand what's in the calculation, and we'll talk about how you deal with that in a few slides later on. So you go to the next slide, please, Michelle. And this slide just kind of backs up that and just shows you different ways of how this can be reported. So if you say, give me proceeds from sale of property, plant, and equipment, and I want to match that into my normalized cash flow of all the proceeds I've got from sale of PP&E, you may, in company one, they may not report that. They may just have proceeds from sale of property held for sale, or company two may have the subcomponents, or company three may have other subcomponents, and company five, for example, they actually report that element. So there's not a one-to-one mapping. So you might map all 6 of these to this. Then you also get the problem where if a company reports the subtotal, then you're going to end up double counting. And this is probably the main crux of the normalization. Doing a normalization of XBRL data is eliminating double counting. So one of the things that's critical to do is to really identify in the calculation all those items that is what I call a leaf node. So it's those items that are not subtotals. So if you got a balance sheet or an income statement or a cash flow statement, first thing you really want to do is just identify all those elements that a company's included in the income statement, the balance sheet, or cash flow, which are not subtotals. And so that's really a matter of just querying their filing and for that statement, and then getting a list of those items. And when you've got a list of those items that are leaf nodes, for example, in the cash flow statement, you can take all of those. If you add them up, in theory, all of them, they should equal the change in cash, or if it's an income statement, they should equal the total of net income if the filing has been done correctly. So this is just one of the probably the most important item of normalization, is to eliminate the duplication or double counting of items. So it's the first thing you really want to try and do is just identify what are all the leaf nodes. I call them leaf nodes. You may have a different word for them, but if you can identify those, then you eliminate double counting. And then you've got a set of all these items, and then you can organize them how you want to organize them. Are they current assets? Are they current liabilities? Are they operating? Are they financing? Are they investing? Or whatever. And then putting those into appropriate buckets that you want to use for your analysis. So go to the next slide, please, Michelle. All right, so on this slide just kind of shows you the same thing again, and you can see that they're going to have different values for those things. So once you've identified, what you're going to end up with, once you identify the leaf nodes, is you're going to get a list of all these items. So, and then what you want to be able to do is to be able to relate those items to your standardized element that you may have. And typically, it's probably a good idea if you're going to normalize this data, is to come up with your own set of concepts that are a high level, probably at a higher level, which allow you to do some analysis. So you say, okay, these are the things I want to know about. In the operating cash flow, I only really care about what are the adjustments, what's the net income, and maybe what's the depreciation and amortization items. And what's the change in working capital. And so then these items, then you can map the underlying XBRL elements into those concepts that you have. And what we do is we go and create a whole list of sets, and we'll say, oh, I've got this item, proceeds from issuance of capital, right? And so there may be, in the US GAAP taxonomy, there may be 100 elements that represent that. It may be stock issued for stock-based comp, it may be, proceeds from preferred stock, or whatever it may be. So what you need to do is to take all of those items and then map them to that total that you want to have in your normalization. And then you really want to be able to say, I want to intersect that with what are the items that I have of these leaf nodes. and then add them up and then get a total. So that what we've found, just in our experience, seems to work very, very well. And so then you can try and get, you can map that way. To map, a lot of the work, however, in doing that normalization is taking your own standardized elements that you create and then mapping those to the US GAAP taxonomy. And there's some tricks to do that as well. You don't really want to go through and maintain lists and lists of elements. And so there's some techniques you can use to make that significantly easier, which we'll talk about in a minute, the ZUUL section. All right. So, here you see proceeds from sale of property, plant, and equipment. So we've got 100, we've got 410, you've got 120. So you can pull these elements. It's basically, this is saying, let's say I've got this, I want to have my own standardized element called proceeds from sale of PP&E. I really want to map that term to the proceeds from sale of property, plant, and equipment, or all 8 of these concepts that we've got defined here. So if you only get the leaf elements, what you're going to find is, and then you aggregate them, you should end up getting the correct totals. But you can see here, you've got this exercise. What you have to do is you still have to map, 8 elements, potentially, there's probably more actually, to the proceeds from sale of property, plant, and equipment. The way we do that is we try and build up these sets in an automated way. So we'll say, would go and look at the US GAAP taxonomy and would say, these are all the elements in the US GAAP taxonomy we want to include, but rather than going and listing them out individually, we would say, go and look at the US GAAP taxonomy and give me all the children of proceeds from sale of property, plant, and equipment, as well as proceeds from sale of property, plant, and equipment from a calculation relationship. And that'll give us a list or a set of 8 items. And then you may want to, there may be some things in other places in the taxonomy, maybe there's some stuff in the disclosures that represent the same things for different industries, maybe REITs or whatever, and then build up a list. And then if you then basically just find those items in that list that are common with what the company has reported as leaf nodes, then that's going to give you the total for the proceeds from sale of property, plant, and equipment. And then you take that process and you basically repeat it for all the line items that you want. And so that's kind of, that we've seen that to be pretty effective and pretty much getting all the data. There's obviously a few more complexities, but we'll talk about those in a minute. But basically that seems to work quite well. And if you look at, like, in 80% of cases, that's gonna work fine.
Campbell, we have a question before we go to the next slide. Should we take that question?
Sure.
Okay. Also, we did get some questions from people asking if the replay was going to be available. Yes, we'll be sending the recording out, tomorrow or the next day. So the question that we received is, besides the top level elements for income, I have found segments. For example, a company reporting net sales. The Excel spreadsheet on Edgar includes a breakout on the same sheet, net sales by contract with customer and membership fees. The same XBRL tag, revenue from contract with customers, is used for the total as well as segments. Is the context ref the only means for differentiation?
All right, so what we're talking about here is predominantly just looking at the element itself and then aggregating those elements. So for example, in the case of revenues, there's a bunch of components that could be included in revenues. And then some of this differs by company. So you may agree or may disagree or may want to reclassify these things slightly differently. So if you had revenues and we've got contract from customers, but then this income that's not contract from customers, maybe it's interest income or lease income. And there's different types of income which may not be for contract with customers. And so then you can say, I have this generic revenue tag and I want to take all of those things and I want to include them in revenues. And there might be, oil and gas industry, they include equity method investments. So you may want to include those in there as well. And that may be presented somewhere else in the financial statements of the company, but you may want to include it in revenues. So you kind of have things at the concept level. Now, the context ref is really kind of referring to, is like dimensions. And so let's say you might have that revenue split up by products or services, for example. So it uses the same element, but you're going to have multiple elements represented by that dimension. So what we do to handle that is we'll go and look, okay, I've got the income statement, and these are all the elements I've got in the income statement. And we'll say, if we don't have a total for the, if we don't have a total for what's revenue from contract with customers, we'll then go and say, okay, let's go and look at, let's go and see if they've put any dimensions on the income statement. And if they have, then we'll say, well, let's go and look for what those are. So let's say they've broken it up by products and services. So then we'll say, oh, do we have revenue from contract from customers? Do we have it for, they've got services here and they've got products here. If there's values, we're going to add those two together. So then we would add those two together, we would get a total for it, and then we would include that in the total of revenues. So the handling of dimensions is something that also needs to be handled. And the way to typically handle this is to basically go and see if we can get a value, which is the aggregate total. We try and get that first. And if that's not available, then we go and look at the dimensions and see, okay, have they provided more detail? Then we'll add those dimensional values up and then get a subtotal for it. Now, all of this, we kind of, we're handling these in something called the ZUUL language, which we'll talk about in a minute, which basically makes this very much easier to do than trying to do in a database or a SQL query or something like, or through the API. But we'll talk about that in a sec. So to answer your question, you do need to take context refs into account if they've dimensionalized the value on the income statement, the balance sheet, or cash flow.
Okay, great. Campbell, just one other quick question before we move on to the steps to normalizing. The US taxonomy names for each line is very logical. Companies report in key labels, which I assume is preferred labels, and tags. How can we match the tags to the US taxonomy names?
All right. So the elements that the company uses should be the same as the elements that the taxonomy is using. So they should be the same. Generally, we ignore the labels altogether and we don't really necessarily care about those. And we would then use the calculation to really ascertain what the items are in terms of, and maybe that's appropriate. So let's say, for example, I've got these different types of current assets. I want to get cash, I want to get inventory, maybe you got a list of them you want to get. So you get these items. And then we go and look at the current assets and we say, okay, this is the current assets. These are all the children of current assets. Have we placed everything in a bucket? And if anything that's left that's not in a bucket, then we'll put that in other current assets. And so everything we haven't predefined where it should go, then we will just basically drop that into other. So then that way, if you add everything up, it should still equal the total of current assets. So I think that answers the questions, but so basically you really rely, you expect tags to be the same. That process really handles the extensions. So if a company's got extensions, and if they're grouped that in a calculation, then we're just basically going to stick it in the total for other for that group. We do map some of the extensions in some cases, and maybe this makes sense. And what we do is we'll just we maintain something separate, and it's not that much, but it's really for these. Maybe you've got the credit and extension, which is really significant, and you really want to include it in the total. Then what we do is we just map that extension back to a base US GAAP element, and then we will include that. When we go and get the values for that US GAAP element and the mapping, any extensions also mapped to that, we'll pull into that category. So if someone created an extension called, my extremely expensive inventory, then we would just basically link that to inventory. So if I'm pulling anything into inventory, I'm going to pull that extension. We do that on a file, based on a company. We assume that they're going to keep those extensions the same period on period. So then when they report again, you'll get that data. If you don't do that, then it'll typically what you're going to be forced to do is to put it in in an other category, which may be fine, but that's really dependent on what your criteria is for normalizing the data.
Great. So Cam, we have some more questions, but do you want to move on in the presentation or?
Sure, let's go to the next slide.
Okay.
Okay, so, and I've kind of talked about this a minute. The first step to normalize the taxonomy is you really want to come up with your own normalized structure that you care about. So the filings that companies are making are very, very detailed. And if you want to normalize the data, you kind of want to get the goal is to try and get commonality across all these filings so that you can do apples to apples comparison across them. So as a result, there is going to be a loss of data to get commonality, but depending on how you can set up your normalization so that you can get commonality across all of those filings on a way that you may want them. Now, different users of data are going to have different use cases for how they want it. Credit analyst cares different than maybe like an equity analyst wants, or if I'm going to insure a company, some guarantee insurance, I may want different set of requirements for that normalization. But all the detail is actually in the data, so you can actually pull that. So the first step you really want to do is go through and say, identify what is all the data that I want, what's the common things I want to call them, and then it's just really setting up that list of items. And then what you can do is once you've got that list, then you can start to associate that with the US GAAP elements you want to use. So if we go to the next slide, please, Michelle. So you want to match the high level items, we talked about this, to the US GAAP. So let's say you've got commercial sales. You really want to link that to all the elements you care about. So that may include all of the items that you've got here. So revenues, other income, operating income, brokerage income. If you want to include all those revenues in your revenues, then you probably want to link all of that to commercial sales. Now, some of them you may not. And what we've done is we've even taken all the banking ones and we put them in there. So and this does happen from time to time, if a company does use one of these items, like revenue from related parties, then if that's in the list of leaf nodes you've got, you're going to stick it in commercial sales. So basically the mapping from the commercial sales item that you got on your left, you really want to link it to as many possible elements as possible. So you kind of want to capture everything that you possibly can that you would want to include in revenues. So that way it'll go in there. If it doesn't go into revenues and you don't map it, then it's probably just going to drop out as part of other income. You probably want to be able to, the best thing to do is to try and go through and link as many of those as possible. And back to what I said earlier, so here we've got revenues. So what we do is we say, hey, just going to take all the children of revenues from the US GAAP taxonomy. Actually, not only the children, but also all the descendants of revenues in the US GAAP taxonomy, and I want to map those into my revenues item. So if you processing a filing and you find any of those values with any of those elements, then you're going to put it into revenues. It's just really setting up a list of instructions of, if I run across a value with this element, where am I going to put it in my standardized map? So someone also had a question. I see Tim had a question here. How can you deal with a situation where one company uses a tag as children, but another uses the same tag as a subtotal? So I've linked all of these. So let's say, for an example here, if the company reported revenues, then I'm going to put revenues and commercial sales. If someone only had related party sales, I'm going to put related party sales and commercial sales. If someone had reported revenues, if they'd reported both of those, I'm only interested in the leaf item values from their filing, from their financial report. So if I pull those, I'm not going to get revenues, but I'm going to get all the components of revenues. So when I add them up, I should, in theory, get to the same total. But I also have all the breakdown of what all those items are. So if I was further stratifying commercial sales, I've got the option to do that as well. So the next slide. So here's an example of some of the things that we've been doing. So what I've done is create like a standardized set of chart, a standardized chart of accounts, and I just go through like maybe run 1,000 filings through it, and then just drop them all into these buckets. And you can see how this is for the income statement. So what I do is I just define my set of elements. Let's say I've got commercial sales, cost of sales, selling expenses, depreciation, amortization, impairment, restructuring, gain, loss, and sale of asset, and then get down to a total of the commercial operating expense, for example, in this case. And this basically works on that way. I have a list of, these are all the things I include as sales. I go and get that list from the US GAAP taxonomy by mapping those high-level elements in the US GAAP taxonomy to sales and get all the descendants of them. I then open the filing and I go and get all the, I go and look for the income statement and I get all the leaf nodes on the income statement. And then I get the intersection and then of those elements for revenue, I sum them up and I get a total of 280. Do the same thing for cost of sales, do the same thing for SG&A, for depreciation, amortization, impairment, Now, this is not quite that simple because you'll see here we've got depreciation. And one of the things I wanted to do was always get depreciation no matter what. Now, many companies will not report depreciation on the income statement, but they have it. So one of the things I'm doing here is I'm actually pulling the depreciation from the I'm pulling depreciation from the cash flow statement if it's not available on the income statement. So this is kind of where it may get, you may have to customize things a little bit to specifically what you need to do. So in this case, that's what we do. Now, if you get the depreciation, it's obviously sitting in the income statement somewhere. So you need to be able to, take it out of one of these other line items because you don't necessarily know where it is. So, and this can be a little bit tricky. In some cases, there are separate elements for cost of sales related to depreciation. So you want to say, okay, do I need to look at those? Most cases, companies are going to be included in SG&A. So we kind of default if SG&A has sufficient balance for it, then we'll take it out of SG&A. And it's not necessarily clear even from the company's filing where that data was included. So this is kind of gets to be a little bit, in some cases, you kind of have to default to an option that you may have to have. You may have pre-specified. So that's kind of one issue with doing this mapping. One other issue is there may be things in the footnotes that you want to bring up and you want to standardize those, but they're not always reported on the income statement. So a good example of this is related to leases. So if you've got like operating lease expense, or you've got operating lease balance or finance lease balance, you can pull it up from the income statement, and then you need to take it out of the particular. You need to reallocate it. So you have to think about a process to reallocate these as well. So we do that. There are elements in the US GAAP taxonomy, fortunately, which companies now are required to report, which tells you which line item on the income statement items are included. So if they've reported that, you can take it out of those balances. So that's just another idiosyncrasy of the process, but something to think about if you're going to build a normalization and you want to do it at a very detailed level, and you want to pull up information from the footnotes that were not on the original income statement or the balance sheet or cash flow. They're kind of like sub-processes you might have to think about. One of the reasons that this actually works is because the income statement balances, the balance sheet balances, the cash flow balances, the items that are on there. If you add them all up, they've got to come to guaranteed totals. Once you start getting in the footnotes data, that's not necessarily true. So if you're bringing up data from the footnotes, you want to make sure that if I bring that up, I want everything to continue to balance. I need to adjust. I need to know what accounts to take these items from the footnotes out of to make sure that the particular statement still balances, and that you're not double counting anything. Okay, if you go to the next slide. So you can see here what I've done here. I've just shown, what are the elements I'm getting things from. So here, commercial selling expenses. I've got marketing, in this case, Amazon, they've reported marketing expense. I put fulfillment expense. Now you can debate this, whether fulfillment expense should go in there or not. I've mapped I've said, okay, I had fulfillment expense and I had technology and content expense. They were dropping through into other. So the amounts for those were coming out on this other line at the bottom, the commercial other operating expense. So I created, as I mentioned earlier, I said, for these extensions, I'm going to map some of these extensions are so significant. I'm actually going to map them into US GAAP elements. So I mapped the fulfillment expense into SG&A and the technology and content expense into R&D. As an example. Now, is that the right place to put them? I'm not particularly comfortable with where they are, but let's say that we're all okay with that. So what's happening now is that those items will just get reallocated into those high-level account buckets that I have. And you might have, and you can see here on SG&A, they've got marketing expense, fulfillment expense, and general administrative expense. So all of those are basically flowing into the selling expense line item. On the depreciation, I've just put some notes there, which basically says, this is the balance of depreciation that they didn't have depreciation on their income statement, but they've got this, they had 15,341,000 sitting in the cash flow statement. So I've taken that amount out of SG&A. So there's kind of been a reallocation here. It wasn't reported on the income statement. So assuming it's an SG&A. So that SG&A total is less the depreciation expense. So then it comes down and then the whole thing should balance out. And the 81 at the bottom, you can see it's got, these are all the items that comprise the 81 million in operating expenses. 81 billion. 81 billion is marketing expense, other operating income expense net, technology content, fulfillment expense, and general administrative expense. Those are the things that they've put on their income statement that represent their 81 billion in expense. So, obviously they didn't report depreciation, but I've added depreciation in and I've taken it out of SG&A. So that's kind of what's going on. But these are kind of, and maybe that's not appropriate. Maybe it should be coming out of other operating expense. As you can see, in this case, I didn't take it out of other operating because there's insufficient balance to cover it. So this is not manual. This is kind of, and we're doing this in an automated way. This kind of gives you an idea of what's going on. But once again, selling and general administrative expense, and I just go through these line by line, is say, hey, these are all the items that could be included in here. These are all the leaf nodes that they reported. I'm allocating these amounts to it. And that's what happens. And then if I've got any other items like depreciation, I'm deducting those from SG&A. Okay. Do we have any other questions before we move on?
Yes, we do have a question. We have a little commentary here that is not R&D. Thank you, Lewis from the FASB.
I put that in deliberately because I knew Lewis disagrees with that.
Yeah, so
I knew he'd be on the call. That's why I hedged it.
So we appreciate the input. Another question that we got is this using Python or another type of software?
Okay, so we'll talk about ZUUL in a second. Yeah, but it is, that is written and that is implemented in Python, but it doesn't necessarily have to be. Yeah, and we'll talk about that in a minute. But to answer your question, we are actually doing this. The underlying code is Python, but ZUUL is kind of like is on top of Python, and we'll tell you why we did that, because there's some good reasons to do that. So the next step was to capture the normalized structure of each reporting company, and then you could see we map some of these extensions where we map those extensions to the actual company. So we go, when we open the filing, we'll say, okay, this is Amazon. Amazon's have they used any extensions in the filing? Do we have a record of those, and do we know where we're going to put them? So we're kind of just basically anchor. It's really weird doing the anchoring with some of the filings going forward. There's a requirement to do anchoring, particularly for ESEF filings. So that may be something that we use going forward. But in this case, we're kind of further refining it, and there may be decisions you need to make about where you want to put those specific items. Like the company itself had, Amazon, for example, had anchored fulfillment expense or technology and content expense. They'd link those. These are operating expense items. But if you've got your own predefined items, you may, rather than having them drop into other, you may want to be more specific about where they go. And you may have your own opinion about what those things are. As you can see, in the case of technology and content development, putting in R&D, people disagree with, and that's kind of the whole point of normalization. You want to be able to control it yourself, so you can put them, where you think they should be. Maybe you think they should be in SG&A, and so then you may do that differently. Okay, we'll go to the next slide. So we talked about Python, and what we use is we built. There's a couple of implementations of this. So we built something called, defined a syntax called ZUUL. And what this does, we implemented it on top of some software called a REL, which is a Python processor. So that can process XBRL. And then what ZUUL does is it basically reads the data in the memory of a REL, and then basically processes that data or accesses that data, and then we can manipulate it. So there is also, Altova also has an implementation, and that's written in. And so it's basically, it works exactly the same way. It's just that it's written in C++. So the ZUUL in itself is its kind of own programming language, but it's a simplified a super simplified version of Python, you can think of it as, but it basically is structured to take into account the structure of XBRL. So what that means is, so if we write the rules, you don't have, if you say I want X, Y, and Z to happen, it is aware that, okay, I can have different time periods, I can do different concepts. So if you define it, it's going to go and repeat, how we saw the normalization of the balance of the income statement there. It'll do it for every year. So it's kind of aware of time. It's aware of things like units. It's aware of things like decimals. So you can actively manipulate those things when you're writing a ZUUL expression. The other thing that it is aware of is XBRL link bases. So if you said, hey, I want to get a list of all those items on the previous slide, we said all these children of revenue or descendants of revenue, you can say, go and get me a set of all the items that are descendants of revenue. Give me a list of all those items that are leaf nodes. And then you can say, give me the intersection of those two. So the things I talk about, you can do in like 3 lines, represent that in like 3 lines of ZUUL, I call it code, but ZUUL expressions. So it makes a lot of that stuff much, much easier. And then let's say someone had asked the question about dimensions, and then you can do things like, if there's no value for this, but there's dimensions for it, give me all the values that were on the balance sheet that were dimensions for this element, and using these dimensions. So it allows you to basically do a lot of the stuff that we've been talking about in a pretty shorthanded way. So I think to like normalize like the cash flow statement, or it's you can do that in under 200 lines basically. And the reason that's so numerous is just because when we did it, for the cash flow statement, we're boiling it down to 50 line items. So you need a couple of lines of code to get the value for each line item. I call it code, but it's kind of a lot more simpler than that. It's not like you're having to learn a programming language. So so it basically gives you a framework to be able to report this information, or basically to pull this information. And it does it because it allows you to pull any facts out of an XBRL instance document. And it also allows you to be able to pull out the taxonomy trees or all the calculations that the company's reported. And it allows you to pull out all the calculations that have been reported, for example, in the US GAAP taxonomy. And then once you've done it, then you can do it for every quarter on quarter and just run that same code and then just execute it over a bunch of companies. So this is just a little bit about ZUUL. We've made this open source. It's available on GitHub. So you can process XBRL content. As I mentioned, you can pull anything. You can pull any facts. You can pull sets or lists of facts. If you're familiar with Python, it uses basically all the Python list, set, and dictionary type functions and intersections and semantic differences. So you can basically pull all this data together and then you can manipulate it relatively easily. And then it understands information about taxonomies as well. So you can navigate any link bases that are defined in an XBRL taxonomy. So we also use this today for like business rule generation. So a lot of what we found is when we went through we tried to normalize thousands of companies, and then I'd look at what were the differences, and probably it would work for I could normalize everything pretty cleanly for C&I companies in 90% of cases, and then 10% of cases it wouldn't work. Then we'd go back and look at those cases and see why it didn't work. And most of the reasons for that were, mistagging or issues in the filing, or they had, tagged things inconsistently from what we would expect with the filers. So to help make that normalization better, we've gone back and then we've seen these issues. And then we've implemented new what we call data quality committee rules. So as we see these problems trying to normalize the data, we put new rules in. And if you have these rules available, then you can basically then filers know what they're doing wrong, and they can fix the filings, which mean then it makes it easier to normalize the data. Most of the issues related to what we've seen is people would miss calculations, miss out a calculation. Which, as you can see from what we're talking about, if you don't have a calculation defined, it can make it very, very difficult to analyze the data. So we're working on fixing those companies who aren't providing a calculation or missing a calculation, so that becomes clear. Or a company may have dimensionalized a value, but they haven't put that dimensionalized value on balance sheet. We saw that in a few cases. Or they've provided a total of a dimensionalized value, and then basically done the breakdown of those dimensionalized values as separate line items, which you shouldn't be doing, because then you end up double counting stuff. So some of these issues, all of the issues that we ran into in doing the normalization of about 1,000 companies, we've added rules for. So I think probably over the next 6 months, a lot of the inconsistencies in filing should be cleaned up. So it should make the normalization of this data a lot cleaner. It's also being used for rendering. So it's also being used for FERC. FERC is the Federal Energy Regulatory Commission. They're reporting in XBRL. So that data is going to be, that data is going to be available in XBRL, but they're also using ZUUL to render the data, and also for their business rules. And so this is, and as I mentioned, this is being used. These rules are then also being used by the FASB and the SEC. They're implementing in their own implementations of it, but a lot of this normalization process is helping us to identify problems in filings, which should make the normalization easier. So that's, and finally, as I kind of mentioned this, we're using it to render XBRL reports. So you could take, any data that's in XBRL, be it XML, JSON, or CSV, and render that as an inline XBRL document. And that's what else has been used for. Okay.
We have a couple of questions, Campbell.
Sure.
First question, what does ZUUL stand for?
Just the acronym for XBRL rules. So it's rule with an X in front of it. So it doesn't really stand.
Okay. Okay, and then the next question is, and this actually leads into one of our final agenda point, is the SEC provides all the data we need to download for US companies. Is there an international organization similar to the SEC so we can download data for international companies? So if you want to talk about the international landscape for data.
Okay. All right. So at the moment, there isn't a central repository of all the XBRL reports that are published. XBRL.org is working on a solution for this, I believe. They have put up something on their website today called filings.xbrl.org. And these are the initial filings for something called ESEF, which is an initiative in Europe to collect public company data in XBRL format across 26 countries in the EU. That's not It's not officially mandated yet across all countries, but people are starting to report. So if you go to filings.xbrl.org, they have a list of the filings for ESEF filers or European filers. Now, some of those filers are also listed on US exchanges, so they're also already filing to the SEC. So that data is available, kind of. But there's some issues with it. It's at the moment and a lot of that data hasn't been audited. However, that data is subject to audit, and starting at the start of next year, companies will be required to have an audit of the XBRL data. So we expect that data to be a lot cleaner than it currently is. So really, at the moment, it's kind of more of a prototype mode, but you can go and look at that data, and XBRL International runs validation checks on it, so you can see those filings, which in theory should be good to go. In Japan, they actually have an API available, so you can query their API, and you can download XBRL filings from Japan. Taiwan has data available. However, that is they don't really have an API. You've got to go to their website. You're going to have to download it, and we've been trying to work with them to make that data more available. Mexico has data on violence. They actually have an RSS feed. So if you're interested, I can, just let us know, and we'll get that RSS feed for you. We had plans to bring in the data from Mexico as well as the data from Japan. We just haven't got around to it, but we are planning to do that as well. And then there's data is available in Israel, has data available, but I once again think that's kind of a bit of a manual process. One of the things that XBRL International is trying to work on is trying to come up with a standardized way so that when this data becomes available, that people can automatically do it. Can automatically access it without having to manually have some manual workaround for it, and it'd be done in a standard structured format. The Federal Energy Regulatory Commission, who is starting to have basically all data for utilities, oil and gas pipelines, so balancing authority and service companies, that data, financial data will be available in XBRL as well, and they use an RSS.
Now we're getting a lot of background noise. Sounds like wind.
Okay, is that better? Yeah, so that data is available also will also be available from the FERC.
Great, thank you. A couple of other questions that have come in. Have you checked typical ratios, like earnings per share across companies in SIC categories with ZUUL? If so, how did that work?
Have we done that? We have not. I don't think we've done that. There's nothing to stop us from doing it. It's a little bit trickier than just doing that. There's different ways of calculating earnings per share, especially if you've got multiple shares. So no one's particularly asked us for that at the moment. I don't see why that can't be done. We just haven't done it at this point.
Okay. And then a couple of other questions. The normalization terms, shown in your slides, Campbell, are not contained in the US GAAP taxonomy 2021. Where are these terms defined?
Oh, these are just made up.
Yeah, so those are the top level, like normalized data fields, right?
You mean like the sales, the commercial sales, and that's
right. I think that's what Peter's referring.
Yeah. So that's really, if you're going to do financial analysis, you may want to come up with your own terms. You don't have to do that. You could try and normalize it to a higher level of the US GAAP taxonomy if you wanted to. We had just done that as an example, but that's just one way of doing it. You could come up with, it depends how you want to use the data. So the terms you have may be totally dependent on the business purpose that you want to use it for.
Great, thank you. And one other question or a couple of questions is there any location for ESG reported information?
In XBRL, yeah, kind of. This is kind of a little bit off topic, but the SEC has an initiative at the moment, or a request for comment, that they're going to put out on this topic. There's a SASB taxonomy, for example, in the US, where they've defined a a SASB taxonomy, which works the same way as the US GAAP taxonomy. And so if people want to report that data, they can. So that data, if people chose to report it, could be available. I'm not really sure if anyone is yet, but this is kind of stuff is all coming to a head. And then in Europe, we've got there's a couple of initiatives underway. The UK actually has its own taxonomy as well. And so in theory, companies could be reporting that information as part of ESEF. So this stuff is kind of right on the cusp of happening. So I can't really direct you to a huge resource of ESG data at this point.
Right. Here in the US, it hasn't been, the SEC still hasn't put out a rule proposal, but as Campbell was saying, they're expected I'm hearing between November and January. But then once that rule proposal goes into place, it'll be out for comment. And so it's going to take a while for that kind of data to be available. But hopefully sometime in the next couple of years, at least here in the US, maybe sooner outside the US. Okay, well, I think those are all our questions, Campbell. I'm going to just move on unless there's any other points that you want to make.
No, I think we covered it. I know there's been a lot of brain dump here, but we're going to come up with a couple more webinars in the series, and then so tune into those, and we'll get into the stuff in a little bit more detail. This is kind of just more of a high level introduction to what's involved.
That's right. That's right. So yeah, and what we want to talk about in some of the next webinars coming up is potentially provide some case studies and also talk about how ZUUL can be used for rendering and business rules, as Campbell mentioned. So the next one will probably be coming out sometime in December. I also want to invite everybody here to please join us on November 10th for our annual XBRL US Investor Forum. This one's called Data That Delivers. And we have SEC Commissioner Caroline Crenshaw is giving a keynote speech. We also have Independent Corporate Director. She's a director at Moody's and General Electric, and she's also the former FASB chair, Leslie Seidman. So they're both going to be providing us with keynote presentations, and we're also going to have case studies on ESG reporting, implications of CARES Act policies. We're going to be talking about how to use XBRL data to set policy on accounting and treatment of intangibles, analytics to support restructuring coming out of bankruptcy, corporate benchmarking, and investigation of effective tax rates. So these are just some examples of case studies that we'll be talking about on the program. So, please join us. The registration link you can see on the screen here, or you can just, go to our website and see it there. So thanks very much for joining today, and, come back and see us again